G'day Chris, how are you today?
I'm well, thank you. Rolling into the start of a new month.
I think it's interesting, you and I both here a month ago, about a huge amount of stuff to talk about a month ago because we just started the year, and fast forward 1 month and a lot's happened, right?
A lot has happened.
Yeah, a lot of noise maybe. As we spoke about last month, Chris, we sort of made the joke about how many times it mentioned the word Trump in his 4-year tenure.
Wow.
We probably already exceeded our quota in the last month, I would suspect. So,
and it's just in terms of like news headlines and those sorts of things, I think I had forgotten about that. That's good. But so a lot's happened this month. I think there's been a lot of noise, but then that's obviously had a knock-on effect in terms of, financial markets, and there's a lot of unknown at the moment.
Yeah, we've definitely seen a return of volatility over the last 3 or 4 weeks, and I think ironically for us as Australian investors, almost the day we had an interest rate cut, the market started to fall. Be it on the back of the rate cut, I doubt it, but perhaps a combination of all of the above. The geopolitical issues, Trump's tariffs, interest rates cut. Well, they kept getting cut. Governor Bullock was a bit. She was still a bit gun shy about future cuts.
Absolutely.
In February, so beyond February, so it's going to be interesting to see where it goes.
Yeah, there's a lot going on.
So Chris, March 2025, here we are, and the key points that we've got here on this slide, markets are risk off. That's probably been, for our investors, probably the thing that's been noted the most. And when we say risk off, obviously we don't really like that word because it's not less risk, it's actually markets going down, right?
Yeah, correct. Yeah, that's right. And I think starting to get, I know we talked about this earlier this morning in terms of getting sort of a few client questions about what's happening, what's going on. Because obviously you've got news headlines and then you're looking at your portfolio numbers dropping. There's a sense of, what's going on here? So obviously that's happening. Driven primarily, I guess, by point number 2 there, which is the tariff and geopolitical uncertainties.
Yeah, and I think we'll pick that apart a bit more detail, but it's certainly, you can't help but feel a little bit anxious at times about when you see the news headlines every single day, and also when you see world leaders debating or arguing on TV, national TV.
Yeah,
that's a bit of a new theme for us.
Yeah, absolutely. Pretty unprecedented.
Yeah,
but, I think that's probably another word we should put in the quota list in terms of.
Yeah, that's right. We'll talk about that feature. But and we'll certainly go through this in more detail in a moment. But at high level, US earnings for Q4 have exceeded expectation, and as we've spoken about quite a few times, the underlying economy is actually pretty strong.
Things are going quite well, and I think that kind of leans into some of the discussions we had maybe late last year, where we're looking at sort of asset allocation for the portfolios and looking at the US going, it's the best placed of the developed economies. And the data, although end of Q4, so end of December, I know there's a bit of a lag there, but it's really cracking along.
Yeah, and across most sectors too, interestingly, right?
Yeah, exactly right. Yeah, it's not just the Magnificent Seven; it's all the rest of the. I guess what do they call him? The US 493 now instead of 500. He's starting to pick up, so that's a good outcome. But I guess we're overlaying, as you pointed out before, all this.
Well, it's interesting the thought. I mean, obviously we have a tendency to kind of invest in the market rather than try and pick the eyes out of it. And we saw the market get driven up by those Magnificent Seven quite heavily, which we'll benefit from enormously in portfolios. They've kind of moderated a little bit, but it is the rest of the market now which is starting to do the heavy lifting, and it's been good from a portfolio perspective.
It has, and I think that was digressing from these slides a little bit in terms of one of the conversations we had with Willis Towers Watson towards the tail end of last year about, if you look at US and global equities have been primarily driven by tech-based companies. I guess what's the rationale for feeling so positive about the US, economy and market itself? And the response was, a lot of it has been driven by those seven, while the other 493 have kind of been plodding along, and now they've got conditions that is quite, positive for earnings and for growth. And now what we're seeing is the effect of that, coming through, which is good to see.
Yeah, well, risk off, right? Let's pick that apart a little bit. So in the last month or so, we've seen obviously equity markets come down. Bond yields haven't been favourable. Commodity prices down. Crypto assets, notably, is down. I feel a lot of talk about Bitcoin as an example, and the price has rallied enormously. Trump was intimating that he might, what's the right phrase, commercialise perhaps Bitcoin to be another currency. But that hasn't materialised yet. But that's off 15 or so percent in the last month. So we've seen really everything kind of trend down.
Yeah, definitely. So there hasn't really been any anywhere to kind of hide, I guess, really.
Yeah.
So
and I think it's also too, like in context, and some charts up here sort of talk a bit about confidence, right? But the interesting thing about it is, in my opinion, is that we've had pretty strong equity markets, really for quite a while now. But even particularly this financial year, the equity markets have been very strong. And if you look at it, even from say 1st January through until now, we've seen this kind of up and down spike. So it hasn't really kind of gone to a point where we're in negative territory. We've just kind of taken a breath and sort of pulled back a little bit of the heat that was in the market, which again, largely driven by the events that we can't control.
That's very pragmatic of you, Shane. That doesn't make a very nice headline.
It does not. It does not.
Well, where we were at the end of the year, well, realistically, that's that's not a terrible outcome, right?
No, but year to date, financial year to date, we're still actually sort of tracking. We're just seeing kind of this risk-off scenario. We're just seeing volatility probably return in a more significant fashion than what we've been accustomed to over the last 2 or 3 years.
Yeah, definitely. And I think that kind of points to the next slide, which was we're going to talk about that uncertainty. You can see in terms of the chart on the right-hand side, the Global Economic Policy Uncertainty Index, and obviously right-hand side is where we are today. For as long as that's been running, we're pretty much as high as it's ever been. That's almost higher than what it was in COVID, which says something, right?
Yeah, and I think when you kind of take a pause on that and kind of try and think about all the data and the evidence, and obviously we talk about evidence and using data to make decisions, and it's certainly the way we try and process this noise. Right now, as I was saying before, Q4 earnings growth in the US has been terrific, like 18% type earnings growth. But yet, so nothing really has changed in the economy, but we now have a new political environment, new geopolitical environment, and obviously with that, markets don't really know which way to turn.
Correct.
And hence volatility and fear comes back in, and you see things drive down. But I thought perhaps, Chris, it might be a good chance to talk a little bit about tariffs. The tariffs are a significant discussion point, and are they effective? Aren't they effective? And perhaps I'll lead it off in terms of specific what they are, and then secondly, kind of how they sort of how businesses adapt. And really in essence, just to maybe put in context of say Trump's 25% tariff on Canadian imports, for example. The goods come across the border, and there's a 25% tax that the American government collect on top of the cost of those goods. So, one or two things happens there. Either that tax gets passed on to the consumer, which is the American consumer in that regard, or the business itself wears the tax, which some do, or the seller or the person importing from say Canada, they might lower their price or a combination of all those factors. But what really happens, and this is why inflation gets created, right? Because it pushes prices up. That's part of the fear of the sort of volatility where it comes from. But really what happens is, and perhaps this is the half glass full view that I have, is that businesses around the globe are very smart. They're run by very smart people, and they figure out ways to recalibrate their businesses, for example. So you might find that a business who produces goods all around the world but also has some manufactured in America, they will just change their business model to produce the stuff in America and sell it to Americans, and the stuff that's produced in other parts of the world, they'll sell to other parts of the world. So, I mean, that's an extreme example of of the most utopic view of it, but you understand what I'm saying is that businesses perhaps adjust quicker than what we otherwise think.
And there's a real intent here, I think, in terms of if you end up taxing external goods from other countries, I was going to say indirectly, but it's not really indirectly, directly making American companies more competitive on a cost basis. So if you're inside America, you're more likely or increasing the probability of choosing an American company because they're going to be cheaper than maybe a importing from China or from Canada or from Mexico or wherever happens, the
Yeah.
tariff's going to be applied.
Yeah.
Yeah.
And I mean, and the thing is, if you recall back in 2018 or thereabouts, the trade war that Trump had previously, it was a significant news event back then, and it's no different today, is that it just gets imposed the other way as well.
Yeah,
so
correct.
China come back with a tariff on American goods.
Yep.
And, perhaps this is Trump's whole motivation to make America great again, is that Americans deal with Americans and have less, global presence, if you will, because that's essentially what he's gone to the polls with.
Yeah. And to your point about recalibration, well, then you can already kind of see it in the political aspect around, I guess, the Zelensky-Trump stuff, where Europe's like, all right, well, we need to step up now. So whilst there's a period of turmoil, and again, this is a gross oversimplification, but everybody recalibrates essentially. So it's just, what it means is there's potentially, over the next period, a change in the, I guess, globalization that has been established over the last couple of decades. Maybe that changes either permanently, depending on, I guess, on where American policy goes, or if it's a temporary thing, depending on if it's just Trump in office. So
and like we note there, I mean, when you have this kind of recalibration or uncertainty, what we always see in any instance of that kind is markets react.
Correct.
In a more kind of flippant way, right? You see some days the tariff or the news is positive, market goes up 1%. The next day it's bad, it goes down 1%.
Yep.
So the reactions are quite specific and quite meaningful, which is what makes hard for investors in the short term. But as we probably very boringly will always say is, underlying conditions are okay.
Correct.
The short term noise is causing whipsawing in the daily prices. But as we will absolutely advise everyone, is we just ignore the noise in the short term, watch for more thematic trends that kind of can influence the longer term returns and adjust accordingly.
Yeah, definitely. Because I think it comes back to, I was just thinking while you were talking, all the noise stuff creates the emotional drivers. And so the worst thing you can do when you're investing is act on your emotional triggers. And I think all the uncertainty, all of the headlines, and they all trigger an emotional response in everyone, which you want to try and avoid, essentially. And I know, as you said, it's boring, but kind of look through that, and the data we have is end of Q4 earnings.
Pretty good.
Economy's going quite well.
Yeah, and even here in Australia, we had a rate cut in February.
Yep.
Inflation, the December read for inflation, if it was annualised, would be about 2% for the inflation read. That was 2% in the December quarter.
Yep.
Rates have come down, which some of our investors are disappointed about because we're seeing term deposit rates roll off as well. But the flip side of that is that's going to drive a bit more growth too, right?
Correct.
So, typically speaking, the share markets have been itching for an interest rate cut.
Yep.
We finally got one. At the same time, we have all this tariff noise and things of that nature, and volatility comes back. So perhaps the application of what the market's been wanting has been watered down a little bit because we've had other factors that kind of come into play.
Yep. But in a let's say in an 18-month context, it's all the underlyings that end up showing through.
Yeah.
So I think the important thing is to say, well, if the US economy is in a good state, Australian economy seems to be improving, which I think is in line, because for as long as we've been talking about this over the last few years, it feels like Australia's kind of been 6 to 9 months behind the US because of where we started from a rate cut and rise position. So I think all things considered, it's more of the same in terms of a steady hand on the till, essentially.
Yeah, most definitely. Yeah, I think we'll see what plays out in the next month or so.
Yep.
But one thing I'm fairly confident about, Chris, is that it's going to be probably as noisy as it has been for the last month.
Yeah, correct.
And we actually used the phrase last month, and I think it's probably pertinent to pick it back up again. But the phrase that we spoke about, remember this in that podcast, and I think the person on the podcast from NAB said, "Welcome to the next 4 years."
Yeah.
And 1 month into that. It's been 100%. That's been what it has been. Very noisy.
Yep.
Lots of volatility, and the world needs to adapt to Trump's policy-making style. And it's abrasive and it's abrupt, which doesn't make us as investors feel good. But eventually, things still have to go through Congress.
Correct.
The normal processes still follow, and that kind of let's use Zelensky on the weekend as an example. That was hideous watching in the White House, where it was hard. I actually found it really hard to watch. Kind of global leaders having such tension of that nature, especially those are the allies.
Yeah.
But then a few days later, starting to moderate that out, and it seems like that's Trump's approach is really hard from the outset, and then it starts to moderate, and then what actually gets implemented is a sort of watered down version of the abruptness at the beginning. But it doesn't make it for fun viewing or fun
No, it doesn't.
investing.
It doesn't. And again, while you're talking, I keep thinking about all the things that we've gone back through in time, where like COVID's a perfect example. At the start, lots of uncertainty, no one knows what's going on. We're surprisingly good, using your word, at adapting and getting used to things, and like, okay, I'm now used to this sense of turmoil, and it almost becomes the new normal in a sense. And then you start to like desensitize effectively. I just wonder whether maybe we're in the initial stages of welcome to the next 4 years, where we need to maybe adjust ourselves and desensitize to his, I guess, political behaviours is the word I want to use, but I guess style before things sort of maybe tend to calm down.
Well, someone I saw the other day actually said to me the first thing that they do every morning is look up and see what Trump said overnight. But I hope that's not what happens every day for the next 4 years. It's probably not going to be the way you want to live your life. But
definitely.
Right now it's what we all do, right?
Yeah,
But probably in a few months' time, like you say, it's all noise and and all the things that he wants to do. He seems like he's pretty aggressive to try and get them done as quickly as he can. So perhaps that's
as well as so most leaders might try and do that over like a 2-year time frame rather than like,
he's just gone.
I'm going to do it in 120 days.
Although I did solve, Chris, the significant issue of paper straws. I'm being facetious, of course, but I did chuckle when he said I'm making an executive order to ban paper straws and bring back plastic straws because they don't work. I went, we're solving the real problems of the world now.
Exactly.
Sorry to be a bit facetious there, everyone, but I had a good chuckle about that. But perhaps we should just round out, Chris, on the chart, that we sort of often talk about in regards to market timing. I think it's a pretty interesting reflection on time. And, you made the point before about COVID, and it's a good one, right? And you look at that chart about where COVID actually, how much impact it had, and then the subsequent recovery, and through history of time. And I always think about these statements not to sound flippant, because you can often dismiss noise and volatility and fear that happens in the short term by saying it'll be okay, just hold on. It's not to sound that way at all. It's more a case of just taking a breath and just considering things in context and reflecting on portfolios, asset allocations, that our portfolios and asset allocation actually really sound. Security is a key component of our portfolios. So those sorts of things that we tailor to each investor circumstance help us work through these points of volatility.
Yeah, correct. And I added a new one in here this morning, which is, I guess, selling to cash. Sort of a bit of a, because I think if we continue to see the increased level of volatility, I know the historically the question I've had from clients is, well, can we move to cash for a period of time and wait out this volatility because it feels safer? And I guess this chart here in terms of gives you your probability of underperforming what I would call like even a 60-40 portfolio is probably a moderately conservative, just underbalanced, let's call it, portfolio. Depending, the longer you keep it in cash, obviously the higher your probability of underperformance, but in terms of the quantum of underperformance from a percentage standpoint is significant.
It's huge, isn't it? I haven't seen that stat. That's a really interesting stat. And you pointed before about feeling safe. It's a natural human emotion, right? Like you wouldn't be normal if you didn't have a fear at some point in time, right? So, but I think that's always important, like you say, you sort of reflect on how the portfolios are looking. What have you done to prepare yourself for volatility? And I feel pretty comfortable that everyone we talk to are kind of well structured as well structured as we can be.
Yeah, correct.
Given the things that we can't control.
Yeah, exactly. Your point there, just context, as long as it's put in context. And I think it's really hard when your emotions are high to think about what's the context of the money. And one of the things that we're always doing is planning before we start. We're trying to generate the context so that the money's invested in context. So when we go through periods like this, we always can lean back on, well, we've invested this money contextually for your life. So you stay the course effectively. So,
Yeah.
yeah.
Well, it's been a good chat today, Chris. I've enjoyed that. Hopefully, everyone at home listening is also gets a bit out of that. And as we often note,
Yep.
we don't dismiss these sort of points in time, but equally so we don't react to them, instantaneously either.
Correct.
So, yeah, we'll see what happens in the next
next
month. I'm
month,
sure
yeah.
there'll be other things that we'll be talking about in a month's time, which will
definitely.
be as headline catching as the last month, I dare say.
Hope everyone has a good month, and we'll see you soon.
Okay, bye for now.